Hey everyone, welcome. I'm Dan Gertrudes, CEO of GrowthLab Finance as a Service, and this is Stephen Byler. He is our president, and today we're going to talk a little bit about how you and your CAS practice can help your customers manage through this weird, crazy, inflationary times. I'm telling you, I don't think it's going to be transitory.
No, they dropped that word long ago, and they wish they'd never touched it.
And so we want to talk a little bit about what our 4 tips are. And most of you are probably going to say, well, we already do that, but I bet you there's one tip that you're not doing. So Steve, let's start with it.
Yeah, no, you start with the basics. In order to help your customers manage inflationary exposures, you need to know where in the business they're most exposed to inflation. What type of business is it? Are you most exposed in your staffing? Are you most exposed in your inventory? Where are you going to be most exposed in your...
So that's like the basic, right? Is identifying the risks, the exposures in your P&L, and let's not forget your balance sheet, right? And so that brings us to tip number 2.
Tip number 2 is you got to build a plan. Let's face it, if without a plan, you can't measure anything. So every year, make sure that you're building a plan. Make sure you're building it actively with your customer, not just taking your average of the last 12 months, because let's face it, the next 12 months are going to look different. Inflation is happening. How is that going to impact your plan? And make sure you build those expectations, those assumptions into the plan.
Yeah, you can't even get up to bat without a plan. So that's tip number 2. And tip number 3, which most of you already probably do, right, Steve?
It's your finance call. Like, you're probably closing the books with the customer and reviewing the books with the customer. Make sure you do that. Make sure you do that on cadence every month. Build that muscle memory, build that analysis so that you're helping the customer look at KPIs so that they are reacting and able to be in the driver's seat when they need to make changes.
Now, the only thing I would add to that is maybe most of you in the CAS world, you already maybe commingling the accounting close with the finance call. However, here at GrowthLab, that's actually a distinct meeting event, if you will. The accounting team takes care of the accounting close, and then essentially it passes the baton for that finance call. So that brings us to tip number 4, which I bet most of you aren't doing.
And that's your operational meeting. We call it the ops call here. So you have your accounting close, your finance call, and then your ops call as soon as probably 2 weeks after the finance call. And that's where you're taking all of the learnings from the finance meeting, having a discussion with the business owner about what changes need to be made. Do I need to hire faster? Do I need to fire? Do I need to buy more inventory? What needs to be done operationally to change your plan? And then you roll that forward.
Right. And let's not forget, right? Inflation, yes, it creeps up and it can take a bite out of your cash and your net operating profit. But remember, you can always increase revenue too. So work with your customers to understand pricing power, pricing opportunities that they can pass on to their customers. And the next segment of this, Corey's actually going to walk you through a Jirav model where he's going to show you how to adjust some of the assumptions, where to navigate in Jirav. So looking forward to it. Thanks, Corey. Thanks, everyone. Thanks, Steve.
Thanks.
I'm going to run us through a super high level look at how you can impact some inflationary pressures on your Jirav model. So there's a couple different factors to this, and we're using a demo account. And so what we're talking about may not be exactly 100% reflected, but the theory and the concept still holds true. So let's pretend kind of you're a service-based business, right? To people-based. So probably one of the main factors you're probably going to be looking at is staffing, right? Inflationary pressures can cause a big impact on just salaries and compensation and people, right? So probably want to take a look at managing staff, right? Whether that's adding new people or whether that's removing old people, whatever that may look like. But one place you'll probably really want to look at is this planned raise. Right, you have the option to do either a dollar or percentage value on the increase in base salary, on any given period, right, on a year-over-year basis. So that's probably the first place I would look at for impacting inflationary pressures. One of the second places I'd look at is probably within the assumptions tab, right? If you've built out this model to be leveraging this assumptions, you'll probably want to impact some of these things, right? Maybe that's services as a percentage of subscription in this case, right? Or bonus percentage or commission percentage or revenue or OPEX assumptions, right? You may have an assumption in here that looks at what the unit cost is if you're a manufacturing company, right? You may want to up that unit's cost, right? So if you're leveraging the assumptions, take a look back in here and probably want to take a second look. Obviously, your cost of sales. A lot of this should flow in from your assumptions or your custom tables tabs, but if not, take a look at your cost of sales, right? In this particular case, we have direct labor. So that staffing piece we looked at would impact this first and foremost. But maybe in, your hosting fees, right? You may want to take a look at some different ways to do this. Could be either periodic growth on historicals, right? If you are projecting to, with inflationary pressures, never mind to the growth in the revenue base, you may want to do an exponential 3% growth on that, right? To account for base inflation, right? And maybe a couple more points if otherwise. Take a look at some of those pieces. And lastly, at a high level, is probably just taking a look at your OPEX and custom tables, right? Depending on how your model is built, you can come into this OPEX section and take a look at your OPEX, and probably best case to just do a month over month first, right? Like just audit it. And from there, you can tack on some few things, right? Maybe one of the top line, like easiest ways to do this that, a lot of customers talk about is just doing a custom of a 3% growth on total OPEX, right? Just do a buffer account, right? And you can do that 3% to grow, periodic growth. So 3% this year, 5% next year, so on and so forth. But there's a couple different ways to do that, but most likely it's going to come down to some form of driver, adding either a buffer, updating your staffing with some bonuses or comp increases, or adjusting your assumptions in custom tables to reflect kind of more of the actualities of pricing nowadays.
That was great. So thanks for watching. Please subscribe, leave us some feedback. Also, check out our website, growthlabfinancial.com. Again, subscribe so you can be notified for the next one.